Welcome to The Explainer. Today we're going to forget about the usual stuff, earnings reports, Fed meetings, all of that. We're going to ask a much bigger question. What happens to the stock market when it's facing the ultimate deadline, a giant rock hurtling straight towards Earth?
So, imagine the news breaks. An asteroid is on a collision course with Earth. What does the market do? And look, this isn't just some plot from a disaster movie, right? It's a really high-stakes financial puzzle. It forces us to put a price on risk, on hope, and on human ingenuity, all in real time. It kind of reveals the very soul of how markets actually work.
Okay, so here's the really fascinating part. Not all disasters are created equal, especially in the eyes of the market. Think about something like a massive solar storm. It's totally uncontrollable. It's an act of God. We just have to hunker down and endure it. But an asteroid, well, an asteroid is a problem that we could potentially solve. It's man versus fate. We actually have a fighting chance. And that one single variable, control, it changes absolutely everything. So to really get our heads around this, we're going to look at three completely different timelines. First, there's the surprise, where we get zero warning. Then there's the thriller, where we've got about 6 months to save the world. And finally, the project, where we have a whole decade to prepare. And as you'll see, each one creates a totally different market dynamic. Now, to understand how a market would react in any of these situations, we have to talk about one key indicator, the VIX. It's the volatility index. You've probably heard it called the market's fear gauge because it measures expected price swings. But in our story, it becomes something so much more profound. So, in our crazy asteroid scenario, the VIX totally transforms. It's not just a fear gauge anymore. It literally becomes a live betting line on humanity's odds of survival. It starts pricing in something you could call a tech optimism premium, which is basically the market's belief in our ability to engineer our way out of total annihilation. Okay, so let's take that idea and apply it to our first scenario. And honestly, this is the most terrifying one, the surprise. An asteroid just appears in the atmosphere, and we've got maybe a few seconds before impact. This is the definition of a black swan event, something that comes out of nowhere and has these massive, massive consequences. With zero warning time, our ability to control the outcome is also zero. There's no time to plan, no time to price anything, no time to hedge. The only thing the market can do is react with pure, unadulterated shock. Just look at how the market would price this stuff in real time. A direct hit on a city, boom. The VIX would just explode to levels we haven't seen since the 2008 financial crisis, maybe even higher. If it hits the ocean, well, that's less catastrophic. But think about the uncertainty, tsunamis, supply chains getting wrecked. The VIX spikes hard before it settles down as we figure out the damage. And what if we get lucky and it just burns up? A tiny blip of fear, and then right back to business. So here's the key thing to get about this scenario. If there's a direct hit, that fear would send the VIX to levels we saw during 9/11. And the selling, it would be instantaneous. We're talking about high-frequency trading algorithms here. These are automated systems that trade in milliseconds. They would trigger a total market collapse before a single human could even process what they just saw in the sky. Okay, now for the fun one. This is the Hollywood blockbuster scenario, right? Scientists spot an asteroid 6 months out. It's a planet killer, for sure. But we actually have enough time to launch a mission to intercept it, just like in the movies. This is the ultimate high-stakes thriller. Our controllability is basically a coin toss. It all rides on that one single mission. The whole thing basically turns the global market into one giant casino floor, where the volatility just ebbs and flows with every single press conference from NASA. The stakes here just could not be higher. A clean, successful interception means a massive relief rally. The VIX collapses as the entire world just exhales. Total failure means all hope is lost, and the VIX just goes to the moon. But that middle one, the partial success, that's the truly terrifying one. You shatter the rock, and suddenly you've got this shotgun blast of fragments. Now, instead of one predictable threat, you've got dozens of smaller ones. That creates maximum chaos and a volatility spike fueled by pure, absolute uncertainty. I mean, just try to imagine this for a second. If that interception mission fails, the VIX doesn't just spike. It would blow past 150, a level nobody has ever seen. And that basically signifies a total, complete loss of hope. At that point, the exchanges would probably just shut down. Game over. All right, let's move on to our final scenario. Let's call it the project. This time, we get a full decade of warning. The immediate threat here isn't panic. It's bureaucracy, it's politics, and it's the slow, painful grind of a massive global effort.
With a decade to prepare, our odds are much, much higher. This is really an engineering problem, not some last-ditch Hail Mary pass. So the market reaction isn't some sudden panic attack. No, it's a slow, deliberate, long-term repricing of literally every single asset on the planet, all based on how well the project is going. This long timeline really shows us that the risk isn't about the rock itself, it's about us, our ability to get the job done. Full success would kick off a decade-long bull market for any company even remotely involved. But look at that partial success. That's so interesting. If we manage to nudge the asteroid so it hits the ocean instead of land, you'd see this massive, permanent shift in how we value things. Coastal real estate versus inland real estate, totally repriced forever. And total failure? Just because we couldn't get our act together? Well, that's a slow, grinding market death march. And this, to me, is maybe the most chilling outcome of all. It's not a sudden crash. It's what you could call a chronic death for the market. A slow, painful bleed out, where markets just decline day after day, year after year, as everyone just watches the inevitable get closer, knowing we completely failed ourselves. Okay, so that brings us to the big question, right? In that crazy 6-month thriller scenario, how would you actually trade this thing? Let's take a look at the playbook for trading the apocalypse. Well, the amateur move, the trap, is to try and bet on a big move in either direction. But with fear this high, the financial tools you'd use, called options, would be insanely expensive. It's like trying to buy hurricane insurance when the storm is already offshore. The price is so high, you're almost guaranteed to lose money. The pro knows this. The pro makes a simple directional bet on humanity itself. You either bet for us, believing our engineers will pull it off, or you bet against us by buying a safe haven asset like physical gold. And this is such a critical piece of advice for a trader, that partial success announcement is the most dangerous trap of all. News that we mostly deflected it might cause a quick little relief rally. But what about the other pieces? A tsunami from a smaller fragment could still wipe out a coastline, causing a second, brutal spike in the VIX. The lesson is clear. Don't get out of your trade too early. You know, this whole thought experiment, it really brings us to a powerful final takeaway about risk, about technology, and about our collective will to survive. And this takes us right back to that central idea we started with. For a disaster you can't control, like a solar storm, the only variable that matters is time. How long do we have to endure it? But for a threat we can control, like an asteroid, the key variable is technology. So, a bet on the outcome. It's not a bet against fate, it's a bet on our own collective ingenuity. And that really brings us to the core philosophy, the big lesson of this whole thing. When humanity is facing a solvable existential threat, you just don't bet against it. Because it's the one trade where even if you're right, even if you make all the money in the world, you lose everything that actually matters. So, that's the ultimate question this whole thought experiment leaves us with, isn't it? When all the chips are down, where would you place your bet? Thanks for watching.